Right. Can I just check, because we've got a couple of businesses joining us today for our workshop. So can I just check, at the moment I can only see Daniel and Nigel. Both of you can hear and you're able to see screens and see our speakers?
Yeah, thank you.
Yeah,
brilliant.
Yeah, we are.
Right. Well, the good news for both of you, we're expecting quite a few more people to join, but if they don't, given it's 5 o'clock on a Thursday evening, you've basically got free one-to-one advice from VAT experts. So what more could you want? So we've also got Jen here, who's going to be looking after our questions and making sure that anything you want to ask gets answered. So all I want to do by way of kickoff is say very warm welcome. Thank you for joining us. This workshop was specifically requested by our construction sector panel chairperson, Emma, who is based in Story Contracting. And Emma Porter wanted to make sure that those involved in construction were aware of the changes to VAT, as there was likely to be significant implications for subcontractors in the construction sector. So we always knew that we were going to be working with a different audience than we usually work with in the LEP, but one that we're absolutely delighted to be working with. I really just wanted to have the opportunity to make subcontractors aware of the changes, but also provide the opportunity for you to ask any questions. So I'm delighted to introduce Emma Forrester and Stephen Ferry. Emma and Stephen are both VAT experts, and they'll probably be experts, we don't know whether you want us to use that word, VAT experts based at Armstrong Watson. And what they're going to do today is have a presentation, but also leave lots of time so that you can ask direct questions. So without further ado, can I hand over to Emma and Stephen? Thank you both.
Thank you. Good morning, everybody, or good afternoon, I should say. So we've had a little bit of an introduction there. We both work at Armstrong Watson as VAT consultants. My history is I was previously a chartered accountant, and I also worked in industry at a large PLC company before I came to AW. And Steve's history is he was a Hmrc VAT inspector, the dreaded VAT inspector. So we can come at this from both angles in terms of helping you when it comes to specific situations. So what we'll do is run through some slides that will explain it all to you, and then there'll be feel free to ask questions as we go along. You can either take yourself off mute and ask directly, or pop your questions in the chat to the side, or at the end we can discuss specific situations that affect you and your business if we haven't covered it in the presentation. Okay, so I'll bring up the presentation now. Hopefully everyone can see that.
Yeah, we can see that, yeah.
Good. Okay, so we're going to have a quick run through the background of why Hmrc have made the changes that they have, and then move on to how it works, end users and intermediaries, which is a little bit of terminology that's involved in the new changes, cover when things might go wrong, anything that you should be watching out for, and specific cases, just to highlight a few areas to consider. Okay, so I have slides with lots of detail on them. We can distribute them afterwards, I'm sure. What I won't do is just read through the slides to you. I'll talk around them a little bit. So feel free to ask me any questions if you see something you're not sure of. So essentially, Hmrc made this change because there was a lot of subcontractors in the industry who did construction work and then raised an invoice with VAT on the invoice, and then just disappeared. So they never actually paid that VAT to Hmrc. So effectively, they were getting like 20% more profit on their work because they never paid it over, which obviously is fraud. And that was costing Hmrc 100 million a year. So the idea of the new VAT changes is that the subcontractors will no longer account for the output VAT, and the main contractor will instead. I guess they're less likely to just disappear into thin air. Okay, so the specified services that are targeted by the changes is anything that is caught by the construction industry scheme. So anything involved in preparing sites, building work, decorating, system installation, anything at all that you would normally do work for and deduct CIS tax from would be caught by the changes. The sort of services that are not included is white collar workers, such as architects and surveyors, the hire of equipment, so scaffolding hire is an example, carpet fitting, which isn't covered under CIS, and any work on construction sites that isn't construction. So we've got things there like running a canteen or site facilities on your larger construction sites. There are also a number of specific supplies that are not covered by the new rules. Supplies of staff is one of them. So if you are providing a bricklayer rather than bricklaying services, a bricklayer would be a supply of staff. And that is because they are employed by someone else, but under your direction and control. And that is different to getting a builder in to do a job that is under someone else's direction and control. So if it's a supply of staff, that's subject to VAT, as it always has been. Any services that are not covered by CIS are not covered by the new changes. And the other one that will be very common is zero rated work. So if you do work on new builds, that isn't covered by these anyway, but those invoices would be zero rated historically anyways. Okay, does that make sense to you?
So far, yeah.
Perfect. Okay, so the key conditions to think about when deciding if your invoice needs to have the domestic reverse charge on there. First of all, is that it's a supply of construction services and materials, and it's made at a standard or reduced rate of VAT. It needs to be between two parties who are both VAT registered and CIS registered, and the customer intends to make an onward supply of construction services. So it doesn't apply to doing work for non-VAT registered customers. So if you go into somebody's home and do some construction work for them, that wouldn't be caught by the changes. End users, if you do work for somebody who is not making an onward supply of construction services, that also wouldn't be caught. We'll come on to that again later, because that's something to just be aware of. There's a few tricky areas with that one. And the third one is intermediary suppliers who are connected. So that's looking at kind of landlords and tenants who are in the same VAT group. Again, that's quite rare, and we'll just touch on that one later. But if that one does kind of specifically affect you, let us know and we can discuss it a little bit more. Okay, so the key responsibilities, the supplier has to include the VAT amount that the customer needs to account for on their invoice. So it's different to how you do it now, in that at the moment you would show the net VAT and gross amount on the invoice. Going forward, you would just show the net amount at the top, and you would include a little note at the bottom that said, this invoice is subject to the reverse charge, and as the customer, you must account for VAT of X amount. You can also check the VAT number of a customer on the Hmrc VAT checker service, and that's just making sure that your customer has the ability to account for the VAT. In most cases, you probably wouldn't need to do that, but if you weren't sure, then that option is always there. As a customer, the responsibilities are to tell the supplier if you're an end user. So if you're not making an onward supply of construction services, you should let them know, because that means they should charge you VAT. And you are responsible for accounting for the VAT on your VAT return. I will go on to how does that work. Okay, so this is the current situation at the moment. You have a contractor and their customer. The contractor will invoice the customer, for example, £100 plus VAT, and they are responsible for repaying the output VAT over to Hmrc. The customer pays the contractor for his invoice, and then they reclaim the 20% input VAT from Hmrc. So this is how it will change. So the supply between the contractor and the customer will no longer be subject to VAT. So the contractor will raise an invoice for £100 and the customer will pay £100. The contractor A no longer needs to account for any VAT to Hmrc, but they are still entitled to recover input VAT that relates to the transaction, but they'll no longer have to account for the output VAT. The customer is then responsible for accounting for the output VAT and the input VAT on their own VAT return. So they effectively charge themselves the VAT and reclaim it. It will contra off on the VAT return, so there's no specific cost to the customer in most cases. And this is a little summary of the box treatment. So on the right-hand side there, we have outside of the reverse charge, and that is how everything is done now. And on the left-hand side, we have how it works under the domestic reverse charge. So if you're a supplier under the domestic reverse charge, the only entry on your VAT return will now be the net amount of the invoice in box 6, which is your net outputs. The customer will now have the net amount of the invoice in box 7 and the input VAT in box 4, which is the normal entries. They will then also have to account for output VAT in box 1 of their VAT return. Okay. Does that make sense? Are you happy with that?
So far, yeah.
Good. Okay, so if we move on next to the end user, so this is where things get a little bit more complicated. If the relationship is between a contractor and an end user is somebody who is VAT registered and CIS registered, but won't be making an onward supply of the construction services. So a good example of an end user would be a property developer. They would be making an onward supply of finished houses instead. So in their situation, you would charge them VAT as normal. So you can see that diagram there is basically what you've always been used to in terms of VAT. The contractor raises an invoice and submits the output VAT to Hmrc, and the customer has to declare to the contractor that they are an end user. That allows the contractor to charge them VAT, which they can then recover on their VAT return. Okay, so we have a little example here. Steve fits a kitchen into Sarah's home, and he is VAT and CIS registered. He uses a plumber as a subcontractor, and he is also VAT and CIS registered. So there's a little supply chain there that would be caught by the domestic reverse charge. Once the work is complete, Steve bills Sarah for the full kitchen refit, which includes the plumbing services provided. So there's 3 parts to this. The first is that Mark would invoice Steve £2,000 for his plumbing services. It's caught by the domestic reverse charge, so he doesn't add VAT to his invoice. Instead, he would include the little narrative at the bottom, telling Steve to account for the VAT on his own VAT return. So Steve does that. He accounts for VAT £400 in box 1 and box 4 under the domestic reverse charge. And when he completes the job, he invoices the lady for her kitchen, and he charges her as normal, for example, £8,000 plus VAT, because it's her home and she won't be making an onward supply of the construction services. If the plumber and the main contractor were to do work on each other's kind of own offices rather than doing it for part of a supply chain where there would be an onward supply of services. For example, Steve has quite a big office that he runs his construction company for, and Mark comes in and fits a new sink. In that situation, Steve would have to confirm he is an end user, and he will be charged VAT under the normal rules. And that kicks in because he's not making an onward supply of construction services. Okay, so this slide is just giving the Hmrc definition of an end user, which we've already covered. The most common example is property developers, but I'm sure there will be other examples. Can you think of any other examples off the top of your head, Steve?
Yeah, I mean, just the end user and the thing, somebody that, you know, there's property developers and anybody that's, you know, like the example you used before where Steve was getting work done on his own office. He's not a property developer, but he's getting work carried out to his property, which he's not going to supply onwards. So the job finishes at him. So he's the end user in a sense, you know, he's the end of the line.
Yeah.
So the transaction to him is obviously subject to VAT.
Yeah. And on the right-hand side of this slide, there's an end user confirmation example. The end user confirmation should be provided in writing, and it should be held on file for Hmrc as evidence of why you've charged VAT on your services. So here is an example of a supply chain that includes a property developer. So the property developer has engaged with a main contractor who is using a subcontractor to do the work as well. So the supply between the subcontractor and the main contractor would be subject to the domestic reverse charge, and the supply between the property developer and the main contractor would be subject to VAT as normal, because the property developer would be able to provide an end user certificate. And we have an example here of an invoice. So you can see we've got a few different VAT rates on there. So the top one is new housing, which is obviously 0 rated. So that isn't caught by the domestic reverse charge. The second line is construction of retail premises. So that would be subject to VAT at 20% and would be caught by the domestic reverse charge. And the next line down is a conversion work, and that is subject to VAT at 5%. And at the bottom of the invoice there, you can see there's a little note to say that the reverse charge applies and that the customer should account for output tax at the standard rate of £20,000 and at the reduced rate of £7,500. It's important to have that note on the bottom so that your customer is aware that they have to account for the VAT. Otherwise, they might kind of miss that you're VAT registered if they just looked at the invoice and paid the amount that was due. Okay, so that brings us on to if somebody confirms they're an end user in a situation when they're not an end user. So if we have a look back at, this is almost very similar to the property developer example. So if the customer says they're an end user to the contractor and charges them VAT, that's fine. The contractor should not then also issue an end user confirmation to the subcontractor. If a subcontractor is working for a contractor who makes an onward supply, then that is caught by the domestic reverse charge, and that is how it should be accounted for. Now, the main risk of that going wrong is actually on the contractor. So although it's the subcontractor who raises the bill plus VAT, it's the contractor who Hmrc would target. And that is because they would try to recover input VAT incorrectly charged from Hmrc. If you were to get a Hmrc inquiry, they would look at that and say it's incorrectly charged and would ask you to pay it back. And your main recourse would be to go back to the subcontractor to get them to 0 rate their invoice. If you think it could be 4 years down the line before you get an inquiry and this comes to light, your subcontractor could be long gone and you would end up out of pocket by the VAT amount. So as a contractor, it's really important to make sure that you're aware of the changes and that you get subcontractors to re-raise invoices where they try to charge you VAT. This slide just summarises what we've just discussed, really. It's that Hmrc is likely to raise assessments against the contractor rather than the subcontractor. They would need to pay it back, and there would also be penalties on that because they've tried to reclaim VAT that is incorrectly charged. The supplier probably wouldn't be exposed to penalties as long as he had taken reasonable care. effectively the default position under the new domestic reverse charge rules is that the reverse charge should apply. So unless you have an end user certificate, you should be doing the reverse charge. Where that's a little bit trickier is where you know somebody is an end user, but they just haven't given you an end user certificate. Again, the default should be to apply domestic reverse charge, but if you know that they should give you a certificate, maybe just try and push a little bit harder and let them know that you need that.
Yeah.
Stephen, were you waving to come in?
Yeah, I just wanted to come in a second. Sorry to do that. I just wanted to say a couple of things about Hmrc's approach to this. You know, from a VAT inspector's point of view, the fact that the subcontractors overpaid VAT won't sort of particularly exercise them. So it's the contractor who's reclaimed the VAT that they'll always look for. And sort of they'll look at the transaction and say, well, that VAT's been incorrectly charged. So therefore, if VAT's incorrectly charged, then you can't reclaim it. And that's a sort of a standard thing throughout the VAT world. So that's definitely where they'd go. In terms of penalties, as I said, the supplier would have might not have known. But in terms of penalties, again, this is new, so I think they'll probably be taking a relatively reasonable touch to this kind of thing. People are going to get it wrong. I think Hmrc accept this, so they might be okay on the penalties. But obviously, if you made a series of errors like that kind of thing, and it happened more than once, then they might sort of dig a bit deeper and potentially look at doing a careless penalty, for example. If you hadn't, for example, confirmed your state, the contractor hadn't confirmed their status or something like that. So it's worth bearing in mind that that's important to get this right, because you don't want Hmrc either accessing VAT from you or raising a penalty, especially in these circumstances. Okay, that was all.
Okay, thanks, Steve. Okay. And so a couple of other areas we'll touch on is if you have a mixed supply. So if you do some work for somebody and there's an element of that job that would be caught by the domestic reverse charge and an element that should be subject to the old VAT rules, Hmrc have said that you can subject the entire invoice to the domestic reverse charge, just for simplicity. And also, if you'd already done a domestic reverse charge supply, it's okay for both parties to agree for all future supplies to be subject to domestic reverse charge. If you're still in doubt about whether or not your services should be accounted for that way, the default is for the reverse charge to apply. Okay. And special billing arrangements. So the new VAT rules came in from the 1st of March and there's no transitional period. They just literally came in overnight. Any invoices that had tax points before that date, so if you raised an invoice in February or earlier, they would have been okay to apply the current VAT rules to. Any invoices after that date should have the domestic reverse charge on them. A tax point is triggered either when an invoice is raised or a payment is made. There's a little table here to just help you work out which of your bills should be subject to domestic reverse charge or not, depending on when you build it. So if the payment was certified before the 1st of March and you received the payment within 3 months, that's fine for normal VAT rules to apply. But if the payment was certified after the 1st of March and before the 1st of March but hadn't been paid within 3 months, that would now be subject to the domestic reverse charge. And if it was certified and paid after the 1st of March, then that would be the domestic reverse charge. Okay, this is some other little areas just to consider that might apply to you. The first one is that employment businesses are excluded from the reverse charge rules. So that's going back to a supply of staff that we discussed earlier on. There's also a 5% disregard, where if the reverse charge work on an invoice is less than 5%, you don't need to subject it to the domestic reverse charge. So if the bulk of the invoice is not construction work, then you can ignore it if there's just a little bit on there. if you're currently on the flat rate scheme, that poses a few issues because your supplies will now be zero rated, but so you'd have to pay the flat rate scheme over on the zero rated supply. So the percentage that you apply to your turnover means that you'll end up out of pocket. It's probably worth considering leaving the scheme so that you can recover the input VAT on your purchases. Whether or not it's beneficial to leave the scheme probably involves a little bit of number crunching and looking at who you do work for. So if your work is predominantly for contractors and you have a lot of zero rated work, it's unlikely to be beneficial to be on the flat rate scheme. But if you're just doing a little bit and most of your work is still to end users or just, you know, people that own their own houses and things, then it might still be beneficial to be on it. The VAT accounting scheme, cash accounting, can't be used for supplies of services that are subject to the reverse charge. So it's still okay to use cash accounting to prepare your VAT return, but you must account for domestic reverse charge invoices based on the invoice date rather than on the date it was paid. And I think if you use Xero and QuickBooks to prepare your VAT returns, the tax codes that they have in place should account for that correctly. Invoice splitting isn't allowed, so you can't split your invoice between materials and labour to allow you to charge VAT on the materials. So that's a way. Effectively, subcontractors are going to be quite hard hit by this in the initial months because they would normally use the VAT amount on an invoice to fund their working capital. So I think that point is just in there to make sure that people are aware that you couldn't bill your materials separate to your labour just so that you can charge VAT on the materials, just to help cash flow. It's deemed to be a single supply of construction services, so it should all be on the one invoice. And finally, credit notes. If both parties agree, then you don't need to adjust the VAT when a credit note is raised. Okay, and final recommendations. It's important to go away and check any contracts that you have in place and just reconsider whether they should be accounted for under the domestic reverse charge. Also having a look at your invoicing and accounts payable procedures to make sure that you can account for domestic reverse charge that way. So that might involve making sure you can set up a tax code in Xero, looking at your subcontractors and seeing who's VAT registered and who isn't and who this would affect. Using additional warranties and things like that in template contracts if you have big contracts on the go, and if you have internal teams, making sure they know what to look out for so that they know if an invoice comes in from a subcontractor with VAT on, that they need to go back and get them to re-raise that invoice. And similarly, if a sales invoice was raised with VAT on that shouldn't be, that they know how to recognise that. And that final point there just goes back to the cash accounting point, just making sure that you're aware that that has to be accounted for differently to everything else that's on your VAT return. And it might be beneficial to consider moving to monthly VAT returns if you're in a repayment position. So if you're doing mostly zero rated work going forwards, you can have a monthly VAT return so that you get your money back off Hmrc quicker. The downside of that obviously is that you have to prepare 12 VAT returns a year instead of 4. Okay, that's the end of kind of the whistle stop tour. Does anybody have any questions or I guess like specific situations that we can help with?
Emma, whilst people are thinking, can I just say welcome to a couple of people that joined us after we kick off, and really just for those that are joining us now, very, very informal. This is totally your opportunity to raise any questions that you've got for Emma or Stephen. The other thing that we're doing is actually taking this small workshop session so that others can see Emma's presentation, and if they've not been able to join us this evening, it will be there on our website. So please do feel free when it's available to share it with colleagues. But sorry, someone was going to come in then for Emma and Steve's Q&A.
No, it's Daniel. I was just going to say I haven't got any questions, just to
right.
thank you for the content, really. Yeah, that's it.
You're
Thank you very
welcome.
much.
Nigel, Ashley, Helen, you're sitting there very quietly rather. Is there anything that you're keen to explore or clarify?
I just wonder if you've had any, so it's just Nigel speaking, I wonder if you've had any issues that you've come across yet. Has anyone been in touch where they've got into trouble with this so far? Or has it been pretty smooth?
So far, we've had lots and lots of queries, as you might imagine, about specific circumstances and things like that, but we've not heard of Hmrc inspections where it's come up as an issue. But it really is early days yet, so we've not found anybody getting into trouble because they've not done something properly yet. So that obviously is one for the future. We'll have to keep an eye on that and see what happens. If any of our clients get a VAT inspection, obviously would be very keen to see how that progressed, for example. But as I said, other than sort of lots of queries, hopefully, yeah, I mean, as I said, hopefully Hmrc are going to be reasonably pragmatic about this and understand that people are, new to it.
It is very, very common at the moment for a lot of subcontractors to still be raising invoices with VAT on. I think there's a lot of subcontractors that they're either aware of the new rules but don't quite understand how it works, or they're just completely unaware that they should be doing anything different. So it almost is up to the contractors to enforce the new changes, really, to make sure their subcontractors are aware what they need to do, and to make sure they send those invoices back if they're wrong.
It does seem like the main contractors have got the bad end of it on this.
Yeah,
so,
they have.
Yeah, and I mean, I've worked on both ends, so I'm not disrespecting subcontractors because I've been on both ends, but some of them can be quite sharp.
Yeah.
Some of it might be by accident, but certainly not all of it.
Yeah.
I mean, I think one of the main things is that a lot of the subcontractors that are doing mainly this type of work are going to become repayment businesses, which was a point Emma made in the slides. They're going to be incurring VAT in their purchases and not having to account for VAT in their sales. So they're going to be repayment businesses. So that's that's sort of it means they're going to get an income from Hmrc, which they previously used to have to pay in a sense, but there is obviously the cash flow implications. So it's not all bad news.
Yeah. It'll become the new norm, won't it? Once everything settles down and everybody gets used to it, it'll become the new norm.
Thanks for that.
Okay.
We're all very shy here today, Emma and Stephen. Cameras switched off, no questions. This is probably because you've done such a wonderful job explaining it to the people that have joined. But whilst we've got the opportunity to ask questions, anything that anyone else would like to raise?
If anyone does think of anything afterwards or in the next couple of weeks, we're more than happy to answer questions if people want to just get in touch with us directly. Yeah, we're more than happy to help anybody.
I think coming from sorry, it's just Nigel again. Coming from our business, from ALM Associates, the main thing for us would be: is there any practical advice that the main contractors can use to protect themselves? What would be the main thing they need to do to protect themselves?
Well, there was we sort of did advise some clients to send out letters to their subcontractors, letting them know about the changes and about what both parties expect. What the main contractor expects their subcontractor to do going forward, and to sort of guide them, if you like, because a lot of subcontractors are one-man bands, and the main contractors tend to have slightly more resources in the accounting department. So we do have a template could share with you if you wanted to get in touch with us, and we could give you sort of a form of words which we sort of send to some of our clients to send, for a main contractor to send. Would that be of interest, Nigel?
It could be quite handy. I mean, we're a consultancy. We don't do any contracting, but we do advise. So for us, if people are going to come to us, it's probably because they've got themselves in trouble somehow. So what we would be looking to do is obviously help them out, but then be able to advise them going forwards as well. So something like that could be quite good, quite useful. Yeah.
Perfect. If you want to drop us an email after it, I think our email addresses are on the stuff. Then we can absolutely share that with you.
Yeah.
Great. That'd be great.
Anybody else want to come in? No, I think you've covered all points for the audience. So all I'd like to say is a massive thank you to Emma and to Stephen for providing the input. I hope you found it useful. As I mentioned earlier, we will be putting a little video of the input that's been provided. We'll also make sure that we follow up this session with Emma and Stephen's slides so that you've got those to refer to. You've had a really kind offer from both of them to respond directly to any questions. And a really big thank you for joining us. It's been a cosy, intimate group. A lot smaller than the groups we're normally used to working with, but we've really appreciated your attendance. We hope you found it useful and wish you all a very nice rest of your evening. So thank you, everyone. Good evening.
Thank you very much.
Thank you very much.
Bye.
Good evening. Bye-bye.
Thank you. Bye.
Bye-bye. Bye, everyone.